Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on PCLN NVDA TSLA CMG and Netflix on the daily weekly time frame. So PCLN bulls did see a little bit more follow through on the second day here, but still upper wicks of profit taking and still rejecting from exponential resistance. So we have our high. Well, really what we have is our low of 1800 on the pullback from earnings. Our high on that bounce was 1835. Our lower low was hit down at 1791, and now we have a lower high at 1822. So if the bulls cannot break this lower high pattern, obviously the bears remain in control of the short term. We have the 50-day moving average support and the daily exponential resistance, and we're in a very tight channel between those two over the past couple of days, and by Monday, Tuesday, they're going to converge so tight that we're either going to close above exponential resistance or close below the 50-day moving average, indicating continuation of this short-term direction. So we're looking at the weekly time frame, and we are seeing pullback. It's normal and healthy. There's a gap on the daily time frame to be watching at 1766, and on the weekly time frame, anything above 1739, 1738 keeps the bulls in full control of a higher low, higher high pattern with extreme strength. We're still holding exponential support in all of 2017, even with a bearish reaction to earnings and even with the market dump day this past week. So that's impressive overall. Just the short term, the bears do have that momentum. NVDA, nice follow through, new all-time high. Bulls just waiting to buy a dip on this name and on this sector. Strong close leading to the gap up, open, and run. We did see profit taking and a close near the low of the day, so if that momentum continues and if we break 135.22, the low of the day, if we break that Monday, the gap to fill is 133.29. That's a little short-term target if we do see the market begin to consolidate a bit after this 2-day bounce to end the week. So the bulls are certainly in full control of NVDA on all time frames. Above the upper Bollinger Band on the weekly, there's no sign of slowdown. You would look at this chart and not think anything happened in the market to indicate any kind of weakness, as the bulls are in full control of NVDA. Tesla had a very weak bounce attempt as well. Bullish reversal candlestick was not confirmed, and we saw a close near the low of the day with bears having momentum. So support is down here at 305.50 and 305.31, a little double low, and then we're going to be looking down at 300 and 290.76. Resistance is the rejection on the high of Friday, 316.50, and since the double top, we had a little bounce attempt, a weak bounce attempt and a lower low, now another weak bounce attempt and potentially another lower low. We'll have to be watching to see if the bulls are able to hold 300 psychological support. Tesla on the daily time or the weekly time frame still very, very strong, still holding exponential supports. And as I keep saying, so many of these names have seen so much upside recently in the past 6 months that they have a ton of wiggle room to the downside in terms of how much pullback we could see while still remaining very strong on the weekly. So the fact that all these names are still holding their exponential weekly supports really show us that that pullback was nothing to shake the bulls at this point. Netflix on the daily time frame, a little bit stronger bounce in the sense that we did close fairly strong and see that higher low, higher high, but we're watching the high of the dump day of 158.78 and watching to see if we set a lower high compared to that level. And if we do, we're going to pull back and we're going to test the middle Bollinger Band support. That middle Bollinger Band is going to be in the upper 155s to start next week, and our support is down at 153 on the dot. That was our psychological support that hit the low of the dump that the bulls were able to hold, but we have to be cautious. It's either going to be a lower high and then a higher low, and then a higher high heading back to all-time highs, or a lower high and a lower low. So we're watching this early this first half of the week as to whether or not these names can form a higher low if the market does consolidate, which I anticipate it will earlier on in the week. Netflix is a bearish reversal candlestick on the weekly after 3 big green weeks in a row. The upper Bollinger Band back to resistance, but again, exponential support holding, lower wick with bulls buying the dip. There's no concern for the longer-term bulls at this point. CMG bulls established a new higher low. That's at 476.04. Not a ton of follow through to the upside. Still remaining in control. The range that we're watching in the short term is that low of support of 476.04. and the high of this bounce of 499. If we break that support, we're looking down at 465. Otherwise, we're going to look for slow and steady continuation up towards that 499 resistance. Keeping in mind, our weekly resistance is very clear. 3 rejections in a row from the upper Bollinger Band, 3 rejections in the past 4 weeks from the 100-week moving average resistance. And if we cannot get over that 100-week moving average this coming week, then we will likely head back down to 465 support to at least test that level. So this weekly 100-week resistance is going to drop down and be at about 490 to start the week. So we will certainly be within striking distance of that level. The question will be, do we reject from it? And this past week, we got well above that level. We were over it by about $7, but obviously with the market dump day on Wednesday, the bulls couldn't hold that level, and it is still resistant. So a tightening range here where the bulls are buying the dip off the exponential supports and the upper wicks are rejecting from the 100-week, and we're going to reach a converging point this coming week with there's really no way to fit within the range between these tight levels as they're going to be right on top of each other. So this coming week, we will either see a loss of this 4-period exponential support or a close above the 100-week resistance. I appreciate you watching. We'll continue to check back in. Have a great rest of your weekend.